Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable.
So let's go through some of the plays in the room, and then we will deal with the primary issues. So a couple of names in the room, did very, very well. Certain names did very, very well. Google was the big one, like really, really big one. It was literally my only green trade in the day, and we'll talk about that in a second. So here was the pivot, right? Here was the pivot right over here. This 992 area, right? 992 area, when this thing completely confirmed, you could see the strength in Google just kind of building as there was a lot of early weakness, especially in a lot of these beta names. Really, really strong move. Just an incredible move. It was literally my only good trade of the day. I got out of it early. I know Talget probably is up, good God almighty, probably up about 13, 14 points on it. I know a lot of you guys are swinging a piece of that. Great job, great job there. SGEN, big move. I mean, big move. Here was the pivot right here. Here was the pivot right over here. This 59 pivot. Look at the move here, guys. It went all the way up to the 63 area. Very, very aggressive. Flare. You guys remember Flare? And again, I got a lot of emails from the people in the part-time trading program. And again, a lot of times people ask, well, is PS60 work on swing trading? PS60 is an intraday, guys. It's an intraday pivot cash flow system. Swing trading is completely different. Swing trading is swing trading. You look at a chart, you're looking at the potential of the chart, whether it's long, short, delta neutral, whatever the case may be, and you are basing your opinion based on a strategic measured move. So the PS60 theory has nothing to do with swing trading. Swing trading is just saying, well, here's the chart. I like this 4150 break, and if it takes out the previous day's low, I'm out. And this was on our watch list the day before yesterday. Big move here. It went from 4150 went to 43 today. Still looks good. Again, guys, everybody just really needs to understand. Majority of stocks are not tradable. Stock like Flare is more of an investment vehicle coming out of a range of a thesis of technical analysis than a byproduct of momentum. Momentum occurs up here when you have 0-0 edge. So good job for all you guys who have that and caught that. So here's kind of what happened to me today. So I really thought that Tesla read the green open today was going to be great. It was going to be really, really good. And when I saw the futures down this morning, okay, I was bidding for Tesla somewhere around down here, somewhere around the 352.40 area. And when I went to drop off my kids at school, when I came back, I noticed, well, the stock's at 353 and change. I'm not going to get filled. The morning is coming to an end, and the market's about to start trading. So I canceled my bid, right? And I said, well, guys, if this thing starts going red to green, especially off that 56 pivot, I think the stock has a shot to get to that first initial 57.5 and then 59. So I buy Tesla. And again, for all you guys, especially for all you guys at home that know this, Tesla's always my biggest position. It's always, especially around whole numbers. It's always my biggest position. And it's a trade that I've done so many times and so many times successfully that, I'm very, very comfortable with the size that I trade. So I buy Tesla today, and I start sweeping offers all the way from like mid-80s to the whole number, okay? And Tesla goes to like 56.20s, 56.30s, nothing big yet, right? Nothing big. And I said to myself, well, it needs to, and I said this first to myself, inside my head, I go, well, it really needs to start building over this 56, or else I have to start getting out of the position, okay? And the more that the time came by, I was saying to myself, there's a problem here. And then when I started saying in the room, hey guys, if it doesn't go within the next minute, we got to get out of the trade. And the problem with that statement, I know a lot of you guys got out small losses, 20, 30 cents, nothing major. The problem with me, okay, they spread me down, okay? They spread me down incredibly hard. So it wasn't like 356, 355, 75. It was 356, 355, 40. And then when they hit that 40 bid, it was 355.40 by 354.70, and they kept on going until they finally plateaued at 53 bucks. I mean, excuse me, they finally flattened out at 53 bucks. So I knew that was my max pain. Horrible max pain. $3 is a horrible max pain, but I knew that was my max pain. So they started bouncing the stock, and they bounced it up to like 54.5. Okay, 54.5. So they bounced it back roughly 50% from that initial decline. I said, well, if they don't hold here, there's a problem. It's going to retest the lows. And the problem was with the trade, I obviously got stopped out at the low, at that low, and it went down an extra $2 before it rebounded. But the problem with the trade was, well, there's two problems. Number one, I was the aggressive buyer. Okay, usually I'd let the bidders start bidding it up. Once they got to like in the 50s, 60s, I was the aggressive buyer because I said, this thing's gonna go red to green. It's gonna explode. It's gonna run up 3 points. It's gonna be a great trade. And the problem is when they didn't follow through, I literally had a minute to get out. So maybe with slippage, I would have lost 30, 40 cents, but it was fine, right? I would have made it back next trade with my Google trade. But the fact that they spread me down, I didn't have a shot. I didn't have a shot. And I wound up giving back 30% of last week's profits within that one trade. And, it felt horrible. It did. It felt horrible. And if you guys notice in the room, I'm never upset when I lose money. I'm never upset. I'm actually very, even keeled about it because I understand it's part of the game. But sometimes the market shows you very creative ways to separate you from your money. And today was my creative way. They really made it a point of reference to show me how insignificant, okay, I can be in the overall spectrum of the market. So when they spread me down, nothing I could do about it. Wound up giving back 30% of last week. It feels horrible, no doubt. But, 2-3 hours went by, I cleared my head, and I said, you know what? It is what it is. It's part of the game. The same way, if you would have told me last week during this time that I would have still X amount of dollars for last week compared to where I am now, I would have still been very, very happy with that. So I don't look at it as, oh my God, look what happened to me. It's basically, oh my God, I've seen another way, another avenue that the market can completely separate you, completely detach you from your capital if you're not bringing your A game every single day. And through the 18 years plus I've been doing this, I've been doing this since I'm a young guy, 25 years old. It's shown me more creative ways how the market can do this for you. So it really is amazing. But again, I'm a kid from the boroughs of New York. We've seen and talked and listened and all that stuff much worse in life than anything that the market could ever do to me. And because of that fact, there is no woe is me. I'm not writing a webinar about it, which I can't imagine how people could sit there and write a webinar exactly what happened. But then again, I'm assuming, if it's basically the same thing I'm doing now, just on print. But again, this is my nightly obligation. But the most important part is, as I say all the time, it's not ever as good, guys. Remember, that's why when the market's talking about euphoria. Like for example, I put on Stockton, I've been talking about the IWM now for 4 days. It's been a rounding top. Right? It's been a rounding top. You're talking about 4 consecutive days of lower highs. And I said, well, if it loses 49.30 on a close, it's going to go lower. So somebody tweets me, goes, "You're crazy." Right, because again, gravity is not real, and I'm the crazy one. So you can see the euphoria, you can see the rose-colored glasses, really tattooed on a lot of traders. And unfortunately, for a lot of traders, they're going to suffer a very, very aggressive wake-up call if you don't really listen to the markets. Hopefully not, but I know it's coming. Might not come today, might not come tomorrow, but gravity is incredibly real. So, the lesson here, guys, is very, 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 very simple, okay? And we say this all the time. We're never as good as bad as the market, as the market plays. We're never as smart or dumb as we appear, on the surface. We're human beings. We're human beings. We're going to make mistakes, okay? We're going to have great days. We're going to have bad days, okay? This isn't social media trading. Everybody, congratulating each other over a $60 gain in some $2 stock. This is when you're trading real capital. That's what's going to happen. And the most important thing is, again, short memory, move on. Short memory, move on. Look at Severino for the Yankees. Pitched the pitched the wild card elimination game. Lasted one batter. Comes back in an elimination game against the Indians 2 nights ago and goes 7 strong, strikes out 10. Short memory, guys. Short memory. There's nothing you can do about it. We're all human beings. We're going to make mistakes. There is no revenge trading. There is no 5-run home runs. They don't exist. It's all about being in control, staying calm, don't get flustered, and most important, make it to the next trading day. And that's it. That's the name of the game. So going to tomorrow, again, market's very, very strong. The big key right now is still that one.